Assalamu alaikum. So, in the last class, if you remember, we were discussing financial modeling, and let's continue from here. So, uh, we were able to finish somehow the working capital sheet. So, working capital was showing us a negative balance of 40,634 for fiscal year 2022, which you can see here. This one. So, this one. Now, my objective here is to make sure that everything is in sync in the entire worksheet. So what we can do is we can go to the balance sheet and remove some of the items that are not in the working capital sheet to make sure that our items or the balance is equal in both balance sheet and working capital. For example, we can remove the marketable securities, this one, from balance sheet. Then we can also remove these entire three things. We can also remove these things. Now, after we have these four current assets and these two current liabilities, which are actually the things that we have here, these four things, these two things. So if you see again, my balance of the net working capital is negative 40,634. If I go to balance sheet, it shows the same difference as well. So that's what is all about checking feature of this worksheet. So I kept this particular point here to make sure that I can always test or check whether I'm going in the right direction or not. So far so good, right? So press Command Z or Control Z, I mean Z, to go back to the previous version of this worksheet. Okay, so the most important thing that I want to demonstrate here is the depreciation schedule. So the depreciation schedule is an interesting uh, worksheet that is very important for us for fulfilling the other worksheets like balance sheet and cash flow statement, and of course shareholders equity. So let me remove some of the stuffs that I have here. um, so first of all, let me remove this. Anything else? No. Okay. So first of all, in the depreciation schedule, I need to put the net sales from where? Well, net sales is in the income statement. So here is the net sales. And then I can highlight the other cells as well. And we have all the things that we need here. Well, let me do it like this. Um, hmm. And then the forecasted ones I want to take. Actually, this will be the same, so I think that won't make the difference. So we can actually take the previous way as I was saying. Yeah, so press on that particular cell and then copy up to FY 2026 column to populate the first row of net sales. And then we have something called capital expenditure. So we need to understand the concept here. So capital expenditure means how much you have invested to purchase new capital, uh, more or less operating capital like property, plant and assets, equipment, etc. So if we go to cash flow statement, which is one of the most important uh, financial statements in accounting, you can see something called cash flow from investing activity. And here there's something called purchase of marketable securities, process from maturities, process from sales, payments for acquisition of property, plant and equipment. What do you see here? This particular item here is what I am actually looking for. So if I put here the reference, here we go. So let's do the same for these 3 years. Now, if I see this particular row, it says capital expenditure as percentage of net sales. So the capital expenditure as percentage of net sales. So this -4% or -10,495, it makes it look odd. So I can get rid of this minus sign by putting a minus value here, and everything goes as expected. Okay. So we can populate these historical values as well. So now it's time to forecast. So if I take the average of this three percentages, we see the average is 3.2%, but I want to take 3.5% in this case. Let's be a bit more optimistic regarding the expenditure. So keeping it 3.5% might be a good idea. Again, don't be cautious about what will be the value here. It depends on the subjectivity of that particular management of what the percentage will be. So no need to be worried about this percentage. So uh, most of the time we take average. Sometimes we take a higher amount than the average, sometimes a lower amount than the average. It depends on whether we are optimistic or pessimistic about that particular item when we are forecasting. Now, go back to the historicals. If we go here in fiscal 2021, we have something called beginning net property plant and equipment, capital expenditures, depreciation expense, asset sales, and ending net property plant and equipment. For this, we can go and see where is property plant and equipment for fiscal year 2021. Yes, you guessed it right, it will be in the balance sheet. If we go to the balance sheet under non-current asset, we have property plant and equipment net, which is $39,440. So this is the ending value of the fiscal year 2021. So if you see the cell reference, it is equal to this one, which is the beginning of 2022 must be equal to the ending of the previous year, as you can understand. Then capital expenditure comes from here. Yes, you got it right. Depreciation expense. This depreciation expense amount will come from this entire worksheet. After we calculate all these things, we get a depreciation amount after we are done with the calculation of this worksheet. So hang with me tight, we will be completing this right now. So let's keep these two cells blank. Now let's move on here. So first of all, if you see here in this particular cell, we need to calculate the proportion of asset, I mean the breakdown of property plant and equipment. Here I have the breakdown for the fiscal year 2021 because I'm taking the fiscal year 2021 as the base for forecasting 2022 and then rest of the forecast period. So here what's going on? So we can see the amount is $20,041. We can divide it by the total, which gives us the percentage. So in this case, our column and row, this is going to be fixed, right? Every time I'm dividing by the fixed amount of something like 1,977,732, I can populate the other two cells as follows. So what's going on here? So what I'm doing here is I'm going to take equal sign. Okay, let me remove this. So what I'm going to do here is I'm going to break down the capital expenditure by the type of asset I have. For example, to make it clear, if you see, I have for fiscal year 2022, a capital expenditure of 14,955. So this is in what? Column F and row number 4. So F4 is the cell reference. And then what's the percentage of this expenditure is for land and building? 18%. Where is it? It is in column E and row number 14. Right? So what we are going to do is we are going to create a formula that works perfectly fine all the time when we are calculating the capital expenditure percentage for those type of assets. So what we are going to do is we are going to create an equation where we give the cell reference of this one and we multiply this by this ratio, which is the proportion of the asset. So the philosophy is, out of 14,955, how much of this capital expenditure was for land and buildings? So what's your guess? 14,955, which is cell F4, multiplied by land and buildings portion, which is cell E14. So simple, just we need to put some absolute cell reference to make it work every time. So think like this: when we are going to implement an absolute cell reference, we first of all need to see which cell, which column and which row will remain fixed and which row or which column will be variable. In this case, I want the row value to remain the same but columns to change. Why? Because the capital expenditure for the forecast periods are in fourth row of this worksheet, right? Yep. But for 2023, is it in column F? No, it's in column G. For 2024, it's in column H. That means I want my columns to change, which is a variable portion of this equation, but my rows to remain fixed. So what I do here is I put an absolute cell reference in the row number, and in case of this particular proportion value, what I want to see, I want to keep the column same, which is E, because all the values are in column E, but the rows are not same. It's 14, this 15, this is 16. So I want the column to be fixed but not the rows. So press enter, and if I do the flash fill, it should be something like this. And the beauty of Excel is you can do it also downward, and here you go, you get the total capital expenditure breakdown for these three types of assets: building, machinery, and another one is leasehold improvements. Okay, so far so good, I guess. Let's move on. So now the next thing is, what about the straight line method depreciation we have selected for the land and buildings? So if we see here, the depreciation for land and buildings will be calculated based on what? Straight line method. Fine. So the useful life is 40. Fine. Land and building value, if you see, this is the same as this one, 20,041. Now if you go back to your accounting 101, what do you know? You know that the straight line depreciation is the book value of that particular depreciable asset divided by the total number of useful life. So from that perspective, we can do the same calculation here, which is we divide this particular cell, which is 20,041, which is cell number C27, and we divide it by what? We divide it by this cell, which is cell C26. So here's the equation here. You press enter, and you just have to put some absolute dollar reference values, absolute reference, cell reference. We are doing it for cell C, I'm in column C, 27, and I'm doing it the same for cell 26, but we are keeping the column same. With that being said, we can press enter. Oops, we can press enter and populate like this. Okay, the same value should come for you as well, 501. Okay, so far so good. So let's move on to this one, land and building. That represents the what? Capital expenditure, right? So press Ctrl C, which is copying this row, and then come here, and then you will have something called paste spatial. This is not the ordinal paste function, rather it has some advanced features in Excel. If you go to paste spatial, you have something called transpose. If you click here, what happens is these values which are in row format are pasted here in the same serial but in column format. Once we get this, it's also time to move on for calculating the depreciation. Okay, so again, civil, it is a interesting point. So we'll assume for simplicity that we have purchased or we have spent this capital expenditure for fiscal year 2022 at the middle of the year. Okay, and for rest of the fiscal years we take the full year depreciation. So I repeat, what we are doing here is for the capital expenditure, for land building, we are going to take the half year depreciation for the first fiscal year of forecast and full year depreciation for the rest of the periods. So what we want to do here is we create a formula like this. What is going on here? Let's explain. So I'm dividing the capital expenditure value by the useful life, and then I'm dividing it by 2 to make it half year depreciation of the capital expenditure amount. So C30 divided by useful life, which is 40, and then I'm taking the half yearly depreciation of that, so I'm dividing by 2 again. Okay, so if it makes sense, you can put some brackets here, parentheses I would say, to make it more easy to understand. So keeping this in this format, I need to put the absolute cell reference again. Column will be fixed for cell C30. Column will be fixed for cell D30 as well. And then press enter, you get 34. And then you come here and then type a new equation. This new equation will be like this, same as the previous one, but I'm not dividing by 2 because I'm taking the full year depreciation. Boom. And then you populate using the flash fill. And then what I'm going to do is I'm going to take these as Control C, and then come here one cell after the first row, and then paste here, and then again take Control C and then paste here, and then again take Control C and then paste here, and then again take Control C and paste here. This is like a waterfall method of depreciating the asset. So with that being said, by the way, if you're not clear why I'm taking one cell gap for the rest of the forecast period, because you can see the year is actually 2023, so it should start from 2023, 24, 24, 25, 25, and 26, 26, right? Okay. So far so good, I guess. So we'll do the same exactly same thing excuse me, for the rest of these assets. So the next asset is machinery, equipment, and internal use software. Okay, machinery, equipment, and internal use software, year one, this one, 78,659, right? Now if you see here, for this one we are also doing the straight line method, right? So what is the useful life? 5 years, and this is the value. So if you want to calculate the straight line depreciation for the fiscal year 2022, what do? Well, the answer is obvious. You actually take the same approach, which is you take this value, I mean the book value, and then divide it by the useful life, and then do the flash fill up to 2026. Okay, and then Control C, come over capex, and then go for paste spatial, and then transpose, boom. And then we do the same here, take capex divided by the useful life. Because it's for the first year, we divide it by 2 to take half yearly depreciation. This is an assumption. It will be mentioned specifically in the question, and if nothing is mentioned, do the half yearly depreciation for the first fiscal year and full year depreciation for rest. And the same for leasehold improvements. So for leasehold improvements, we have, this is the capital expenditure for leasehold improvements, but we have no information here given for our leasehold improvements. So what we can do here, is we can look for other information that we have here. So I guess you are clear up to this, so let's stop this video here and then continue the next one.